Hey, everybody, the debate rages on with no end in sight.
It's term insurance versus permanent insurance, which with each side vehemently stating their case while attempting to make the other side feel like a ripoff. Right, Dave Ramsey?
Well, what if both sides are wrong? I mean, Dave Ramsey is clinging to half truths and antiquated philosophies and outdated policy designs that aren't even used anymore. For entrepreneurs and high income professionals, especially, Dave Ramsey's advice is robbing you of tons of financial freedom.
Here's a much better way. Get tailored advice and policies designed to fit your unique situation because one size fits all financial advice doesn't fit anyone at all.
That's right. So in this video, we're going to cover why life insurance, when to buy it, how much to get, and what kind to buy. That's right. All right. Now, here's the question. Why must you choose between term or perm in the first place? Right? Maybe it's better to choose, maybe both? Yeah, that's right. So each of them have different purposes. They serve different objectives, and you can benefit from both of them at the same time or at different times. It's not one pitted against the other.
That's right.
Okay?
Very good.
So most people, though, are never shown this, so you're getting a huge advantage by watching this video. But by the end of this video, you're for sure going to know the difference between them and when to use them. You'll have more options and flexibility than you can ever imagine, and a tax shelter to save money that the IRS can't get their grubby little hands on.
Good to know.
This is risk management at its finest, okay? This is going to be you and me. This is us. You and the coach. We're planning for the worst, but we're hoping for the best. And we know with confidence that we're going to end up somewhere in between and everything's going to be all right.
So huddle up, team. We are John and Tara Thorman, your money coaches for entrepreneurs, small business owners, the self-employed, and everyone who wants to be one.
Okay, so here's a quick summary of each side of this hotly contested debate, okay? All right, so in the term life insurance corner, wearing the blue trunks, okay, we got term insurance that is designed to terminate.
Right.
If you don't think term insurance companies make a lot of money, you're not paying attention, okay?
Right.
They design those policies to terminate. So after 10, 20, 30 years of paying premiums, policy's done and you have nothing and they keep all the money.
That's right.
But when you are young and healthy, you can buy the most amount of insurance protection for the least amount of money, which is a good thing, right?
Right.
The problem is when you get older and that policy terminates, now you've got no protection and you still want it. You're left out in the cold, in the rain, in the dark with no protection. It's not a good situation. Today, there's really good term life insurance and there's really bad term life insurance.
That's right.
Do you have bad term? Would you know the difference? How do you know? We need to know this, okay?
Good questions.
Next, permanent life insurance. In the other corner, wearing the red trunks, is permanent life insurance, okay? It's designed to accumulate savings and to last your entire life, okay? When designed properly, and if you have strong cash flows, it is an excellent tax shelter that also provides insurance benefits. It's an invaluable estate planning tool, and it'll give you incredible insurance benefits when you're older and want them the most. There's really good permanent life insurance, and there's really bad permanent life insurance.
That's right.
Do you know which one you have? Probably not. So guys, right now I just want to throw this out there, okay? If you don't know what you have, if it's any good or not, then meet with an insurance professional, an independent agent that can really review your policy, analyze it, and make recommendations. They're qualified to actually advise you on this stuff.
Do you know where your policy is?
Good question, right? Most people buy it and stick it in a drawer and forget where the thing is, okay?
Right.
I'm going to put a link down below. You can meet up with the coach, and we'll analyze it and make recommendations and help you figure this thing out. So you're not stuck with the bad kind. You can get the good kind while you can still qualify, okay? Because it's like home insurance. You can't buy home insurance after your home burns to the ground.
Right.
Same thing with life insurance. You can't buy good life insurance after you have cancer or a heart attack or a stroke or diabetes or you're dead. you need to get it ahead of time. So we can help you figure that whole mess out and put you on a path to financial freedom.
Sounds good.
All right, so let's tackle this topic looking at a great example, okay? Imagine we got a young family. They're struggling to get by, right? I mean, they're working hard. They got bills. They got student loans, credit cards, car loans. They got 3 little kids screaming, running around, sucking up all your energy all day long. That family needs the most amount of insurance protection for the least amount of money. Would you agree with that?
I do.
That's got nothing to do with a middle-aged family whose kids are grown and gone, who've paid off their house and are focused on saving and planning and investing for retirement. Those are 2 totally different situations. They do not deserve the same financial advice on their life insurance. Completely different situation, okay? But in both cases, we have to plan for the worst and hope for the best. We've got to put insurance into place that maximizes your flexibility and your options so that you can adjust later, because you don't know what the future holds. You have no idea what the future holds. Right. So you don't want to get caught stuck in a situation that you cannot change or adapt or respond to because you picked the wrong kind of life insurance, okay? I don't want that to happen to you, and there's ways to fix that, to prevent that from happening. One of the primary objectives of this money game is to ensure that you can keep playing the game. You want to make sure that you don't get knocked out and can't play anymore, right? Okay. Your choice of life insurance really ought to be based on your current financial situation and obligations and cash flows, okay?
And this is really very important. As long as you are healthy and qualify, you can buy additional policies as your needs change.
That's
and
right.
They will.
And they will. As long as you're healthy and you qualify, you're not stuck. You can always add more policies, but you don't know that's going to be the case. So we want to get started as early and as soon as possible. All right. Let's keep going.
Yeah. So why do people buy life insurance?
2 main purposes for life insurance, okay? Number 1 is income replacement. This could also be role replacement. Like perhaps you're a stay-at-home mom or stay-at-home dad,
right,
and you're not generating income for the household. What you're doing for the household is irreplaceable and expensive.
Correct. Yeah.
So that'd be the role replacement. The income replacement is for the spouses that are generating income, and the family's dependent on it, so we would want to replace that if you were to die prematurely. The good type of term life insurance, okay, allows you to be a beneficiary on your own policy. Say what? Yeah, you probably never heard of that before, right? You can become the beneficiary of your own policy if you have living benefits attached to it, okay? And this is massive, and this is exactly what bad life insurance is missing. They don't have it.
Right.
Good term life insurance will replace your income while you're alive if you have a critical illness, a chronic illness, or a terminal illness. You can access those insurance benefits to replace your income while you are recuperating or while you are knocking those things off your bucket list because your time on earth is limited. The bad term life insurance, okay, really shouldn't be called life insurance at all. It's death insurance. You only receive a payout after you're dead. The second type of life insurance, okay, provides for a savings account in a tax shelter. Plus, you get the insurance benefits. So this one is unique, okay? The good permanent life insurance provides for income replacement, plus it gives you a high-performing savings account that grows tax exempt. I call it nest egg insurance because it protects your nest egg. It protects your assets because the living benefits of this type of insurance policy can act as an alternative to your long-term care. And long-term care is terribly expensive when you are a senior citizen. In addition to that, typically the savings in this policy are protected legally from creditors and predators. Also, the savings inside this policy is protected from market risk. So market losses, you don't have to worry about it. You get a good rate of return, and there's no penalties or taxes for accessing your money at any time you want for whatever purpose you want. It provides additional diversification in your retirement portfolio because it is a separate asset class. It's not stocks, bonds, or cash. It's a cash value life insurance policy. It's It's a totally separate asset class, and it can help diversify your portfolio and protect your money. Also, this cash value in a life insurance policy is an excellent alternative to bond funds. Bond funds are very volatile and have been shown to be highly correlated to equities, if you just look at 2022, for example. And so this is an excellent alternative to protect you from market volatility. The cash that accumulates inside this insurance policy is an excellent volatility shield, okay? If you've got a lot of your money stored up in equities, when the market tanks and drops by 50%, you don't want to be selling those shares at such a heavy loss because it'll destroy your retirement account. You'll run out of money way too soon. So you use the cash value in your insurance policy as a volatility shield. Spend out some of that money and give your equities time to recover in price before you start selling those shares again. Lastly, the tax benefits of this permanent insurance policy for estate planning are humongous. It helps you transfer wealth down through your children and your children's children. And if you read Proverbs, you know the instruction there, right? It says a good man leaves an inheritance to his children's children. And how can you do that if you retire with very limited retirement assets, which you spend down because you're going to live way longer than you think? A 65-year-old couple today can expect to live into their 90s, okay? So the insurance benefits give you a real viable way to spend your assets down but still leave an inheritance to your children's children. Bad permanent life insurance policies, they don't work like that. They don't have a complete suite of living benefits. You may just get a terminal illness benefit, but not the critical and chronic. So you got to look into that. In addition to that, they don't offer the ability to maximize the amount of cash that you can stuff in those policies, and they don't have competitive savings rates on the money growing inside the policy. Now, this is interesting, okay? The strength of this tax shelter inside of your permanent life insurance policy, the government passed legislation in 1988 to limit how much money you could put into the policies because it was so good. They were being used as a tax shelter, and they wanted to limit how much money people could put in them. Isn't that amazing? Most people don't know this. It's so good, the government had to put a cap on it, okay? Now, it's not gone, okay? The tax shelter is still there, and you can set these up intentionally to maximize the amount of savings, but this is good. And if you got lots of cash flow and lots of assets and you're not sure what to do with it and you want to minimize your taxes, this is a great vehicle to use. Stuff it full of cash up to the government, maximum, that limit, and grow that money tax exempt. According to Ed Slott, who is a CPA and nationally acclaimed as America's IRA expert, he says the tax exemption for life insurance is the single biggest benefit in the tax code. Make it part of your retirement savings plan, right? We're not coming out here saying this is going to, silver bullet, it's going to panacea, fix all of your retirement issues. No, let's get real. But it can be part of it. It should be included in the mix because the tax advantages are so good. The safety and security is so good. You're going to save money someplace anyways. Why not include it in here where you can get a competitive rate of return and have it be tax exempt?
Number 2, when is the best time to buy life insurance?
Yeah, great question. And that's kind of another debated topic here. I know a lot of people think, oh, well, listen, I'm young, I'm healthy, I'm single, I don't have a mortgage, whatever. I don't need life insurance. And I guess, that's a valid argument. But here's the counter argument is what's your death date? You don't know. What's your date of having a serious health crisis? You don't know, right? And so really by buying life insurance when you're young and healthy, that's when you can get it at the lowest price. But it's not just the price.
Right.
What you're doing is you're ensuring your ability to have high quality, affordable life insurance later in life because you just don't know what's going to happen, right? And the rates for life insurance are dependent on your health and your age.
Right.
As you get older, the price goes up. If you smoke, the price goes up. If you're unhealthy, the price goes up. If you've had a critical health issue, the price goes up. So the best time to buy it is when you're young and healthiest and you can afford it, right? But that's something that term insurance gives you the opportunity to do.
Right.
Another time to consider buying life insurance is every time you have a major life event, right? So if you get married, review your life insurance. You buy a home, review life insurance.
Right.
You have babies, review life insurance. You have more babies, review it again, right? But here's something a lot of people don't consider. If you used to smoke and then you quit, review the life insurance because you can get a way better rate. It could be half just by quitting smoking. If you used to be way overweight and had diabetes and then you did a healthy lifestyle change, you dropped a bunch of weight and you're not diabetic anymore, boom, review life insurance because you can get a better rate. Any of these major lifestyle events or birthdays, right? If you turn 30 or 40 or 50, like when there's the big milestone birthdays, review your life insurance policies. These are all great times to buy life insurance. Also, it's time to review life insurance when you're doing retirement planning and estate planning. These are critical areas where life insurance plays a huge role in transferring wealth that's tax-free to your heirs, but also in making sure that you're going to have an income that's tax-free during retirement.
And so number 3, how much life insurance is the right amount to buy?
Another great question, okay? And there's several different formulas or ways people approach, this subject. There's one that's very generalized and non-specific. You'll see it with Dave Ramsey and his folks. And basically what they say is take your annual salary, your annual income, and multiply it by 10 or 12, and that's how much life insurance you need. That's one way, but that's not the only way, and it may not be the right way for you, okay? Another way to look at it is called the DIME method. With DIME, you look at death expenses, income replacement, mortgage payoff, and education payments for the kids. You add all those things up together, and that gives you the number that you should purchase for life insurance. There's another option. It's called the human life value, and that looks at trying to calculate what's your life worth. That's super difficult to do, right? It looks at your current income and your projected future income based on your, career path and your trajectory, all that kind of stuff, and tries to come up with a formula for figuring that out. But then there's also a cap. The life insurance companies typically are only going to insure you for a certain amount of money, and it may be 25 times your annual income. And you can check on this, but so if you're making $100,000 a year, maybe the maximum amount a life insurance company would insure you for would be 25 times that, or 2.5 million. But that's a great guideline. And I think the younger you are, the more you want to get because of inflation. Okay, in 20 years, $1 million today, 20 years from now, will buy you $500,000 worth. It's like it'll cut it in half. Basically, in about 20, 24 years, it cuts it in half. So you need to include that and kind of plan ahead for that as much as you can.
And number 4, what kind of life insurance is right to buy?
Great question. And one thing I want to bring up here really quick is, about half of Americans don't have any life insurance, right? The other half that do have life insurance, I think it's around 20% of them only have life insurance through work, through a group policy. And I do not encourage, recommend, suggest that you depend on a group life insurance policy for your life insurance. Treat it as a bonus, okay? And here's why. You don't own it. A group life insurance contract, you do not own that life insurance. And so when you move on, you change careers, change employers, that insurance does not go with you. And if you've had a health event, right, or you're 10 years older, whatever, all these different factors that go into it, you're not going to qualify for the best price anymore, if you qualify at all. So always own your financial peace of mind. Always own your own life insurance policy and treat anything at work as a bonus, okay? But number 2, whether you choose term insurance or permanent insurance, only buy life insurance that has living benefits. Those are way too valuable. If you've got some cheap term insurance policy for 10 years and no living benefits, that's a waste. Literally, that's not serving you at all, okay? The cost of living benefits could be zero. A lot of people now today are including it at no extra cost. So don't go shopping for the cheapest term insurance policy you can find online, because A, they're not going to educate you. B, they're not going to tailor something for you. And C, you're just going to buy the cheapest
Right. And it's not a buck.
SHIT that you can find, and it's not going to have living benefits with it.
Right.
Okay. 3, if you choose the term out of affordability, make sure that you only get the term insurance that has a provision in the policy to convert it to a permanent policy. Again, if you're shopping for the cheapest, thing you can find on the internet, it's not going to come with this provision. And this is critically important. You want to make sure that you can convert that policy into a permanent policy down the road so that you're always having insurance protection. Okay? You don't want to buy a 20-year term insurance policy, and in year 20, months before it's about to terminate, you find out you've got cancer, right? Or you have a heart attack, because now you're ineligible. You're not going to qualify for a good life insurance policy anywhere else. Mm-hmm. That's why you don't know what the future holds. So don't waste your money buying some piece of crap that's not going to help you later. Make sure that when you buy term insurance, it has living benefits and it has the ability to convert it to a permanent policy.
Right.
I don't think I can stress that enough. Anything else is trash. Don't even think about it. Mm. So, what do you own right now? Do you own nothing? Time to fix that, right? Mm-hmm. Click on the link down below in the description box and set up an appointment with the coach so we can fix it. Do you own bad term insurance? Mm-hmm. If you don't know for sure, click on the link in the description box so we can review it together and fix it. Do you own bad permanent insurance? You don't know? Click on the box down in the description box and let's set up a time so we can review it and make sure that you're getting the best bang for your buck, maximizing your options and maintaining all the flexibility in the world you need to confidently and securely get through retirement and be able to create a lasting legacy for your family. Seriously, do not go online and look to buy the cheapest term insurance policy you can find. Okay? For $1. Do you go shopping for the cheapest heart surgeon, the cheapest brain surgeon?
Right.
No. You want somebody that's skilled, an expert that knows what they're doing, has done it 1,000 times before, and can really set you on the right path. Mm-hmm. So, which insurance is right for you? Is it term insurance or is it permanent insurance or is it both? Mm-hmm. You can do both, okay? It depends on your stage of life and what is going on, and you can always add more policies later. But make sure that your policies come with living benefits and the ability to convert them to other policies later, right? Go get you a $2 million, $3 million, $5 million term insurance policy with those benefits and convert it as your cash flow improves. Because really, who doesn't love a good tax shelter, right? Mm-hmm. Who doesn't love the ability to save money at a good rate of return with no market risk and access to it regardless of what you want to use it for and regardless of how old you are? Like, this is powerful stuff. You can build up all kinds of savings inside of a properly designed permanent life insurance policy and use it to fund all kinds of wealth building activities outside of it and replace it whenever you want. Mm-hmm. Okay? There's leverage in life insurance. $1 of premium payment can secure $1,000 of or more of insurance benefits and start saving money. It's unbelievable, but you got to do it right, okay? So, guys, we would love for you to drop some comments. Let us know what you think, but crush that like button, okay? Crush it! And share it and subscribe to the channel. Join the team. Be part of this movement, okay, to get educated and to make wise financial decisions so you can win your money game.
Very good, hon.
Thanks, baby.
Good job.
See you on the next video.